Sitting on another $4,000 over the last week. I take that cash flow. By the way, these positions are hedged, so I see no impermanent loss. But the point is, I take this cash flow and then I buy more assets with it. And again, I just want to share the alpha on exactly how I'm thinking over the next 20, 30 years. Like, this is exactly how I'm thinking about my crypto portfolio. Now, so over the last 5 years, I've built a multi-million-dollar crypto portfolio. Over the last 7 years, I built a multi-million-dollar investment portfolio. And over the last decade, I built a 8-figure plus net worth. I am not saying that to brag, but I have learned a lot. And in today's video, I want to talk about the long-term plan, how I see things as an investor. Now, I do consider myself an investor, and I hope you do too. It starts with identity. So 10 years ago, I said, hey, I'm going to become an investor, and I started investing in the S&P, in index funds. I was literally just putting a few $100s every month into investments, and I felt proud that I had ownership of these massive companies, which, by the way, when you buy a share, you own a piece of that company. Sure, it's a tiny piece, but you still own a piece of that company. That's super inspiring too. So before I started buying cars and Rolexes and going on fancy holidays, I was like, well, I want to own a piece of that airline. Maybe I want to own a piece of the car industry. Maybe I want to own a piece of the real estate or the rental income. Maybe I want to own a piece of New York real estate. Now, when I discovered crypto, my portfolio started growing very quickly. You can do very well in crypto and DeFi. I do see those as two separate. So in this video, I really just want to dive into the details of that. And again, my hope is that you leave this video with some insights, some wisdom, and you can understand the psychological element of this. I'm going to cover some facts here, and it'll really reveal why most crypto investors, DeFi investors, and most people who invest in the stock market lose. Now, we cover a lot of this, especially the psychological element in Crypto Wealth Without Wall Street. Is available on Amazon. It is a bestseller across 3 different categories and like 8 different countries. Grab a copy. 100% of the proceeds do go to charity. If you want a link, just leave book below in the comments. We're also working on our second book. This one I'm going to make available for free, and it's 10 chapters all about the psychology. It's going through the second revision right now, but there's going to be 10 chapters, and it's all about how to think as an investor, as an entrepreneur. So if you do want a copy of that, just put new book and we'll make sure you get an early copy of it. Okay, here's what I want to talk about. The game we play, and please watch this video in its entirety and leave a comment. Let's get this video seen by as many people as possible. I know this video is not the most exciting, but if you can stick through it, if you can study this, and if you can apply it, you're going to win the investment game instead of just chasing dopamine hits. Now, the game we're playing is we earn fiat, right? We trade our time for money. Whether you have a job or you're an entrepreneur or you even built a company, and even if you build an empire, there's some trade happening there where you're trading time for money. Now, maybe it's a little more leveraged for you, but end of the day, you're going to be earning fiat. The name of that game, and this is the whole game as an investor, the name of the game is to move that fiat, which is depreciating, it's getting devalued, it's worth less and less year over year, and we want to move it into something that we could see as a store of value, bonus points if there's scarcity, and bonus points if it appreciates. Now, that's not the end of the game there, because bonus points if we can cash flow those assets or those investments even better. I'm in a lot of dividend stocks, and obviously DeFi cash flows me more than my entire stock portfolio times 10. But the point is, why would you buy a piece of real estate and just let it sit there empty if you can cash flow? And that cash flow can help service the debt, or if there was no leverage when you purchase said investment, it can go into purchasing new investment, which is my long-term plan, right? I have a DeFi portfolio. I treat that very differently than my crypto investment portfolio. My DeFi portfolio cash flows, right? I'm sitting on another $4,000 over the last week. I take that cash flow. By the way, these positions are hedged, so I see no impermanent loss. But the point is, I take this cash flow and then I buy more assets with it. And again, I just want to share the alpha on exactly how I'm thinking over the next 20, 30 years. Like, this is exactly how I'm thinking about my crypto portfolio. Now, if we look at this math since the 1980s, I took the average price of a piece of New York real estate. So this was kind of like a 2-bedroom apartment, waterfront, New York City. It cost $90,000 in 1980. So store of value, scarcity, and it appreciates. Now, you're able to take leverage on a piece of New York real estate back in the day. So I just did 20% down on a $90,000 piece of real estate. So we're going to look on the return on investment on your actual cash. I also put into the math rent, and that was average prices of rent. So we're going like best case scenario here. And I compared it to, hey, if you would have just taken $18,000 and put it in the S&P 500 and did nothing with it, what would the final value be? So this is from the 1980s. Again, waterfront, prime, New York real estate, and just the good old boring S&P 500, some kind of index fund, an average of the entire S&P, your final value of the New York real estate would be $1.5 million. So you turned $18,000 into $1.5 million, but you had a property, you had maintenance. This does not include the costs, etc. So I'm saying this is absolute best case scenario. It's probably a lot lower than that, but this is absolute best case scenario. You made 83x on your money. S&P would have been 2 million at 115x. Now you would have seen rent on your real estate. You would have seen dividends in your investments, depending how you invested. You had leverage on your real estate. By that time, obviously, all your debt is completely gone. No leverage in the stock market. Effort was very high on the real estate, very low on the S&P. We could say it was as passive as you could make it, but this is where it gets interesting. The data shows that most people who invested in the S&P 500 at that time didn't do nearly as well as someone who invested in the real estate. Now we're going to bring this back to crypto DeFi, but this is really worth double clicking on. This is how I think about it as an investor. I know that the more active I am with my investment portfolio, the worse I'm going to do. There's a psychological element of buying a piece of real estate. It's easier to hold, it's less liquid, you can't trade it, you can't do anything with it, and if you're having a bad day or bad week or bad month, you can't take it out on that investment. You can't really make a stupid decision, or there's a lot of hoops to jump through, which you can eventually come to your senses and say, oh wait. With stocks, it's even worse. With crypto, you can wake up at 3 a.m. and liquidate or sell. Obviously stocks, you put your order in crypto, you can instantly make some very bad decisions, which most people do, which is why they miss and lose this game. So real estate created by far more millionaires when the S&P outperformed real estate, and it was easier and it was passive and you didn't have to do anything. Now, why did real estate create more millionaires? Well, it was forced leveraged, it was forced holdings, but we know stocks won. If we actually do the math, stocks would have been a better investment. Super easy to enter, pure compounding and zero management, but most people still lost. Why? They sold early, they spent their dividends, they tried to trade, they took leverage, they tried to time the markets, or of course they just never invested at all because they were waiting for the perfect entry. Now times that by 25 when it comes to most crypto investors. That's why they lose. And I need to drive this point home. I am a buy and holder of my investment portfolio, my crypto investment buy and hold portfolio. I do not touch it, and it continues to grow. I don't care if the price of Bitcoin is 125 or 90. Again, there's many different frameworks and charts and things we can look at, but this is by far one of my favorite. I don't really look at the 4-year cycle because the 4-year cycle doesn't really exist anymore. I think it's dead and it's outdated, but I love this rainbow chart. And right now, and I can see the activity in crypto as of this recording is back to kind of a low. Whereas to me, psychologically, I'm the most excited. I'm investing heavily. And regardless of what the price does next week, next month, I see Bitcoin being $1 million plus asset. Now, if you stop and think about that, and there's a massive case for Bitcoin being worth $1 million. And this space is only going to grow. And I'm just going to use Bitcoin as an example because it's an asset we all understand. I did some math here. This is over 10 years with Bitcoin being worth $90,000 as of this math. So Bitcoin's worth $90,000. If you just buy and hold Bitcoin over the next 10 years and Bitcoin hits $500,000, which I'd say is worst case, that's 18.7% year over year. I will take that all day, every day, over real estate, which is active and you have to manage it, and over the S&P, because again, the returns are nearly double. Now, if Bitcoin hits $1 million over the next 10 years from $90,000 right now, that's 27.2% year over year. You are running circles around Wall Street. And if Bitcoin hit $2 million, that's a 36.4% year over year. For 99.9% of crypto investors, it would be better for you to buy Bitcoin or build a crypto portfolio, lock your hardware wallet in a safe, and put a 10-year timer on it, and in 10 years, get access to your funds. Again, crypto returns run circles. DeFi returns run circles around traditional markets, but most people lose because of this. It's psychological. It's more liquid. You can click buttons. I am such a huge fan of passive investing. Again, I treat my DeFi portfolio very differently. My crypto portfolio, I haven't touched in 5 years. I just keep adding because I know that not doing anything plays in my favor. And so far, that strategy has played out. I've run circles around much more sophisticated or smarter investors, people who looked at charts all day. I've run circles around because I haven't done anything. Please let me know in the comments if this is landing. Now, DeFi I do very differently. I have around a $500,000 DeFi portfolio, and it cash flows me consistently every single day, and we've hedged our positions, especially with the uncertainty and volatility of the market. So of course, this is much more hands-on. I manage this daily, but we call it DeFi as a business for a reason, because you manage these positions. So yes, I look at charts, I make decisions. This is my business, this is my cash flow. And then I take what I earn on a daily, weekly, monthly basis, I move it into a crypto investment portfolio that I do not touch. It is locked, out of sight, out of my mind. I rarely check it. Do not care. A few weeks ago, my portfolio was down around 150K over 24 hours. I don't care. There's also been times where it's up 200 grand over 48 or a week. I don't care. I'm looking out 5, 10, 20 years down the road. I know it's better for me to just not touch it. The data proves that over and over. I really want to know what you think. And I know that a lot of people in the crypto space, it's like their first time actually investing. They're not pros yet. And I'll tell you right now, the pros, they don't do a ton. They're not actively managing their actual investment portfolio. DeFi is obviously a different beast. This channel is full of DeFi videos, but your actual investment portfolio, you stack quality assets, proven, they're actually solving problems. I'm not talking about you're making speculative plays. We're ultimately talking about Bitcoin, ETH, and some of the top alts. We're looking at revenue generating protocols. Great investments. Most others are speculation. And if you can do this, again, just study the book, study this channel, commit to becoming a pro. It's worth it. Don't trade this stuff. You will lose. The data shows it. So my long-term plan is really, really simple. Keep stacking Bitcoin, ETH, some top alts, and have a DeFi portfolio that keeps printing. That is my DeFi as a business. And I take my earnings, which I do weekly, and I just buy more blue chip assets. And I'm doing that for the next 10 years. My math tells me I'll be worth over $40 million if I can just do that consistently and not make emotional decisions or speculate. If you stuck around to the end of this video, congrats. Do let me know in the comments. And if you want to see more content like this, do let me know. Like, subscribe. You know the YouTube drill. And with that said, I'll see you in the next video. Peace.